Hello, folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation. It's great to be back with everyone. All right, cover a few disclosures here. I'm going to put a few more in the chat. All right, 1 second. I have feedback there. Forgot to mute my monitor. At least I know my sound is good. Let me just share this. And as usual, we will also show you guys the standardized returns of some of these ETFs that we look at. Now remember, we go to tradestation.com. In the top navigation bar, there is this link to Insights. Go to Insights. That is our Market Insights blog. And on that blog, you'll see the rundown for today's webinar. Now, it's kind of interesting. I chose this. It's a little bit maybe provocative, but I think this is really kind of the way that we might want to start to be looking at things with Apple. But first, I want to look at some of the key points here because there are some other interesting things that are happening that have really not gotten maybe as much attention as they should. I think when we look right now overall at the market, there's all this talk about Trump and all these things like that. But there have been some actually very unusual and powerful things happening in the actual internals of the S&P 500. So one of the things that stood out to me, we have our rundown of the key points in the S&P here. What's interesting is that we saw a really strong surge of companies above like the 50-day moving average and especially the 20-day moving average. Lots of new highs suddenly come together. So now if you go to the top here, there's a zip file right here in this link. The zip file has a series of ELDs in it that then provide you with indicators. And when you have those indicators, you can load these workspaces that we're working with here. So it is interesting about this is that basically, um, if you look at this, we go to empty breadth first of all. This is one that is a kind of real simple thing that shows a series of things like the advanced decline line, but we see a big increase in the number of 52-week highs, a big increase of stocks above the 20-day moving average, and the advanced decline line starting to kind of move higher. Now, I made a special workspace, and I'm not going to share this one for a little bit because it's really kind of not pretty, but here's the basic thing it does. It basically looks at the stocks that are above the 20. This is an indicator from TradeStation, or technically not an indicator. It is a custom index. And this shows the number of stocks above their 20-day moving average in the S&P 500. So when it goes up, it means more stocks are above the 50-day moving average and vice versa. So this is a form of breadth analysis. So I created a special indicator. What this one does is this compares the last reading of this line to its lowest value in the last month. And then I optimized it as a strategy, and I found that it was most meaningful with looking at 19 candles instead of a month, which is 21. But the key thing is when you see this sudden surge in this kind of lower line, this peach colored line, what it means is it means that people are very quickly rushing from being really bearish to really positive. And we saw it also, if you go back to the end of 2023, you could see when the market ripped off these lows, we saw this very strong improvement. And you actually saw it starting kind of in, October, the market kept drifting. This was starting to tell us that people were starting to get, much more kind of engaged. And once that happened right there, and we talked about it at the time, this was the beginning of the bull run that we've been enjoying ever since. That was when the people really started, when the market really started believing the Fed was done, with rate hikes and moving toward cuts and all that. So this thrust tells us something. And if you look at it right here, you can see once it thrusts higher, it generally, I put an automated strategy in here just to test it. And very often, once this thrust occurs at a dramatic element, a dramatic magnitude, you get the continuation. It might not be sharp gains, but it's smooth, low volatile gains for several weeks after. So I think there's an interesting thing to see, and we're seeing it right here. So we're blasting back up toward those highs with this strong improvement in the breadth. So this is a special little thing I created, and this is some of the examples of things you can do. If you use things like easy language and some of the strategies. Speaking of strategies, if you go to, I want to just take you really quickly back to TradeStation.com. If you go to our um, learn, and then the events, my colleague Jesus Nava is going to be doing upcoming events. He's going to be doing a special webinar um, on automated strategies on the 11th of February. If you want to learn more, I think it's here, this one. So I wanted to just kind of tell you guys that Jesus is going to be doing something that might be of interest for you if you're interested in learning how to use automated strategies. But there was something else that happened. Let's just go over. I'm going to look here. There's another very quick chart of the S&P, but something else happened here. I'll explain this all in a second. But the American Association of Individual Investors last week had the most negative reading since when? November 2023, right here. Okay. It also had the lowest bullish, the highest bearish. This week, it changed of the number of people bullish increased by 18 percentage points, and the number of bearish dropped by 11 percentage points. Guess what? That was the biggest change since when? Since November of 2023. That's the American Association of Individual Investors. If you go to their website, look at the sentiment survey, you can find they have an Excel spreadsheet, and you can go in, you can I came up with. I haven't seen anyone else really citing it the way I'm showing, but I think it's important to realize that we get these moments of time when things get excessively bearish. Everyone is concerned, oh my God, the rates are going to go too high and Trump's going to do tariffs and this is going to happen and blah, blah, blah. And you get to this point of absolute negativity. And what's interesting is look at this period of time here. We barely dropped. We just kind of ground along and we were just miserable and really unhappy and depressed, but we really didn't have the price follow through to the downside. Why? Because there were not a lot of sellers. There's not leveraged money on the long side. And we have double digit earnings growth coming. The economy is expanding. All these things are in play. And I think that's all there. And then you have the mental and emotional bearishness, but you don't have the actual technical confirmation of any of it. You don't have the actual technical conditions present, like for example, the 50-day moving average is under the 200-day moving average, or you're just have various things that would indicate that you've entered a longer term downtrend. None of that was present. Instead, we basically had a period of sideways movement when we basically went nowhere since the middle of October, and now when you see this breadth thrust, it may actually suggest that that period was actually similar to this period. And now we're actually seeing this period of bullish sentiment take hold. And I wanted to kind of emphasize that there's reasons, like I mentioned, the breadth analysis I just did, and also the American Association of Individual Investors. There's another interesting note from Nomura Securities. There's a guy there who studies options flow. His name is Charlie McGilligot. I've never heard of him, but he's interesting. This is an article on Market Watch, but basically it was saying that we saw a huge swing in options, price action going from the overly bearish to optimistic bullish upside. So that was another interesting thing to see. So and there are certain things here that are kind of going in that direction. I want to point out that one of the things we often talked about when we had this kind of market environment was we would get periods of tight sideways movement followed by smooth upside. And what's interesting is the early stages of a move, you get that. So we actually look here, you don't see a lot of the sideways movement. You see sideways movement, then drops. But in the early stages, you see sideways movement and then continuation to the upside, and it never goes back. So here we are right now. Let's take a look at there's another chart I have of the S&P 500, but this one I like. I use this one a lot. We looked at this one last week, but this one now is in a spot where let's see if we basically get a sideways movement at the old high around 6,100 as we march toward Apple, Microsoft. Down here at the bottom of our rundown, we have the calendar. Wait, I'm sorry, Meta. That was the one on Wednesday of next week. We have a Fed meeting next week. We have GDP next week. We might have PCE next year. I'm not really sure. I mean, my view here is that basically a lot of this macro stuff that we've talked about a long time, is now kind of less important. Why? Because earnings are expected to grow in the double digits the next 3 quarters, and the Fed essentially is kind of mostly done what it's going to do. They've been through the cycle, and now they're kind of just, receding as an overall catalyst, and that means that, when that kind of thing happens, it does create that kind of potential for there to be just focus on the fundamentals with things like strong earnings growth and things like that. They're at least expected. Now, it's interesting when you actually take a look at this because what do we have aside from those earnings coming? We basically have, and I have to just say, the Fed, yes, they're next week, and we have GDP, and we have Apple, and we have Microsoft. But the big thing that we might really have everyone focused on is February 26th. That is when Nvidia reports earnings. And, I think at this point in time, we have to realize that that might be the single magnetic event that pulls the overall market if it wants to move higher. And I say that because if you look in the past, if you look at the way Nvidia has often moved, I don't have it on this. Yeah, I can actually show you quickly on this chart, the trading view. It shows the earnings more quickly. But anyway, you can do it on TradeStation, but I don't want to waste time. Basically, if you look last year, it started running in January, into that earnings report in late February. So I think the thing right now is, we are on the 23rd. So we're kind of at this spot in the cycle. Now, it has not broken out yet, but there's a lot of, positivity here, focus on things like NVIDIA and what might happen. Now, on top of that, with NVIDIA, we basically have President Trump announcing this idea of this thing called Stargate, some kind of initiative that is going to stimulate AI investment. And I think it's important. We actually mentioned it in this article right here how chips are pushing higher, and I think that is kind of that is the big story right now potentially in the market. Is essentially if you look at the Philadelphia Semiconductor Index, stocks on the TradeStation platform, we basically see that we have this long period of sideways movement that that has this essentially a bullish direction overall. And so I think right now we have to just look at this and kind of see this has gone nowhere for a long time. This is our October high. This is a sideways channel, but I think you can say longer term, people probably would view this as an uptrend. And then what do we have in front of us? We have NVIDIA earnings with Blackwell coming out. We have all these other things like Trump doing AI announcements. And I think right now the other thing is, you know, one of the first times I actually heard this in many years of watching the stock market is the idea of sovereign. Oh, we have enterprise, we have consumer, but now we have sovereign. So I've never really heard people talk about things like this, but it's a different vertical. Basically, people are now talking about countries are competing in AI. China released some kind of AI thing recently. I think it's called Deep Sea. I'm not even sure what it's called, but it came out a few weeks ago, and that's getting people all stirred up. Now you have Trump with this Stargate thing. And I think we're in a spot here where there's a good chance that we are going to see more announcements like this. You have, England maybe England's going to do an AI announcement. Maybe France is going to. Maybe I don't know, Indonesia. All these other countries are going to start saying me too, me too, and we could actually start to see this kind of global AI space race or like something like that when everyone starts focusing on this overall. And I think that's important to realize is that we're in that kind of part of the trend now where nobody wants to say that they don't believe in AI. I think that's the key thing. Everyone wants to be on board with it. Everyone's going to be pushing it. So we're at that spot now where that I think is kind of the way the trend can unfold. And then you also put in front of us things like the upcoming earnings and stuff like that. You look at the semiconductor index here, essentially moving sideways for a long time, but above that 200-day moving average, series of higher lows. You did a trading view idea on it. If you want to look here, this one right here. So anyway, I want to just put those things out on your radar. There's a link to our trading view ideas at the top of the blog post, about today's webinar. So if you want to see these, but we break down a lot of these things. We did it in a few different articles because I think this is pretty significant. I wanted to kind of mention that. It was also interesting. It might seem kind of unrelated, but CNN laid off 200 workers. Now that's interesting in a way because when you think about it, well, do you think that they would have just done that? I mean, I'm sure there's cost cutting and things like that, but the point is that there's a lot that can be done with AI to generate news. So the thing is I think right now you're going to see more of that of companies saying like, yeah, these things are now at a spot where there has the potential to become a productivity driver. And I would just imagine that some of these things we're seeing right now in the world of media and things like, CNN job cuts, all that stuff, it would not be happening if you didn't have the ability to reduce, to replace, some of this capacity and this work with artificial intelligence. So this is another drumbeat in the background, basically seeing, this thing from Trump and then the CNN news. And then also Jeffries came out and basically said that that Microsoft Azure could have higher than expected growth. And I think it's important. If you take a look at Microsoft here, I mean, Microsoft is also in a very tight sort of pattern, not very far away from its 200 moving average. It doesn't look that different than the semiconductors here. So I think if you look at Microsoft here, earnings in this one are next week. And I did not have time to kind of analyze some options strategies here. I'm trying to kind of figure things out, but this might be something people kind of look for because if things are positive in Microsoft, this might be something where people can actually see some kind of expansion in this and a strong number. This might be something where people start to look for some opportunities with the options in terms of, is it going to be bullish, a vertical call spread, maybe looking for a break above like 460 or this higher up here around 470. This is now kind of the world we're in because I think if you look at Microsoft here, here's the weekly. I mean, it really has gone kind of nowhere. Um, Pretty amazing when you really look at it for, in some ways, Microsoft hasn't gone anywhere since March or so of last year. So I mean, you've got something here where if people want to get excited and get bullish, these names have some potential to start moving again. And I think that's also one of the things you see this note from Jeffries. It's just kind of interesting. So I want to kind of put all those things together. The other thing that's interesting today is that Trump is jawboning interest rates. He is jawboning oil. So who really knows? There's going to be some kind of drama between Trump and Jerome. I think we all know it. But again, it'll be one of these things that probably by the time it happens, it will probably be so just contrived and really not that important. Um, so I think right now that gives a little bit of um, kind of moral support, so to speak, or just some kind of reason for you to be kind of optimistic overall about macro conditions. But the thing that was more interesting to me was just the kind of him talking about things like energy, and I think that we look at energy here, it really had a potentially excessive run to the upside because of people looking for everything Biden did. He kind of like threw all these things out there. Some people were cynical, said Biden waited until he knew he wasn't going to get reelected in order to do these last sanctions on Russia because they actually had the potential to push up oil a lot, and they did. But now the question is going forward, what is the likely sort of direction on this? And I think when you look at the overall situation, oil, it has had issues. We have a really strong run up now in the XLE, or if you look at things like crude oil. And now we might be more in the direction that we start to get this drumbeat from Trump of we want lower oil prices and things like that. This could actually be something here where people looking for downside movement might actually see some opportunity here in the energy sector. We did a trading view idea on Devon Energy, which also is in a kind of structural long-term kind of downtrend. Kind of look at that resistance level there. We did another trading view idea on Conoco Phillips. Also here, when you look at this, you could probably say this potentially looks like a downtrend. Your lower highs, 50 days under the 100-day, under the 200-day, has this kind of overbought snap up. But, if you look at this level at 106 from that last earnings report day on October 31st, kind of just petering out there. So this is something where, these had a strong run up. The 8-day exponential is still above the 21-day exponential on these. So you can argue short term, they're in a spot where they still have a little bit of bullish momentum still in place. But you have, intermediate term trends that are neutral to bearish, long term trends that look more on the bearish side. So some of these energy names right here, I think the overall environment, focused, if you were to step back and say, where is the attention going to be? Where is the vibe going to be in the next month? Is it going to be higher energy prices, or is it going to be big tech earnings? Is it going to be AI? Is it going to be things like that? And, maybe that's actually more where the news is going to be heading and less in the direction of geopolitical risk. I think that's just kind of a way to think about it here. So, all right. Those are some of the key points. It was also interesting to look at Netflix. I mean, it was just interesting just to see this kind of ongoing just strength. I wanted to mention just some of the growth in this has been really dramatic. And this is one we've talked about, and this goes back, I don't have time to bring it up now, but it goes back to what we had talked about the power of business transformation. When companies kind of reinvent their business model, this company, this has gotten way less attention, I think, maybe because they've been firing news reporters and, because there's been a lot of job loss, I think, in across all media and financial news and stuff. But the fact is that Netflix has completely reinvented itself. I mean, this company has achieved a major business transformation by switching to this advertising based model. and they've pulled the levers correctly from what I can tell when you look at the numbers and stuff. I want to just point that out because it's very interesting to see, this sort of you know business transformation that has been successfully pulled off. And it's one of the themes we talked about. Remember, we talked about our 7 catalysts for stock movements. One of them is business transformation. This is just quietly happening in the background. Um, and then basically, let me just see here that mentioned everything I wanted. There was also another thing. I mean, I just not a big surprise. I saw a note from S&P Global that basically said generative AI um, funding. This is private equity and venture capital. It was more than 56 billion last year, and that was up from that almost doubled from 29 billion in 2023. So, you know, trends like this, you can say it's been going for a while, but this is maybe something where it's in that again, it's kind of in that sweet spot where it is not super new or novel, and it's also not to the point when everyone has like 5 chatbots that they're paying for, and the whole world is AI. I think right now this is that, like I said, this is that sweet spot of a secular trend when we go from, 10% of people using AI to 30% to 50%, and then those numbers get big. And so I want to just point that out right here that it was interesting to see that movement, but at the same time, trends like this last more than 2 years historically. And it is interesting to kind of see because, there is an argument here in some ways that in many ways AI you could argue is potentially more useful than the internet was because it doesn't just empower people, it replaces people. And I mean, who wants to argue about that philosophically? I'm just kind of saying like this is something that is happening, but it has potentially more runway ahead of it. And that was an interesting report from S&P Global. All right, so I want to get to my kind of my main subject of this, which was speaking of AI, or not having AI, is Apple. So I think it's interesting if we actually look at Apple here because it really does stand out in terms of what is not happening in Apple. And this kind of of movement. First of all, it is interesting that if you look in last year, or I should say, end of 23, we saw this big rally right into kind of you know December, and then it just petered out and stalled. I mean, it's interesting that Apple basically made its 52-week high the day after Christmas. So this was kind of just like a year-end zombie drift, and it has all been erased. And so I think when we look at this overall, we really have to realize that you know well, first let me just show you. If you look here on, for example, let's just go to our price grid, for example. And this shows like net change year to date. So you can go here to data, add symbol list, NASDAQ 100, for example. What's interesting about this is we can actually look on a year to date basis. I'm going to just show you how I came up with this. And I'm always looking at comparisons like this, and they are interesting to note. But if you look year to date, Apple is minus 11%. Look at the other companies. Not many are minus 11%. You have like, I mean, these are mostly obscure companies. Not maybe not obscure, but they're not particularly important companies. Things like Monster Beverage or things like that, Kraft Heinz or I mean, so if you look at the kind of big names, you can sort by average options volume. See Nvidia, year to date it's 9%. Tesla's positive. Just now I'm sorting by average option volume. Palantir, year to date they've been doing pretty well. But overall, it's kind of interesting to kind of see. You can see that MicroStrat was this. What is this? MicroStrategy? Yeah, that's kind of been jumping on a year-to-date basis, I guess, since that was the end. Anyway, the key thing is that Apple is of the major names. It's really the only one that's negative this year, and it stands out at a time when the overall market has been, decent. So that tells us something. Um, so look at this timeline. It starts really back on the 7th of January, and it's like every day, every other day, another negative thing. Moffett Nathanson is, cuts them to sell, and then this guy at TF Security says so. It's all about market share losses, AI failures, or delays, or whatever you want to call it. But when you look at this, Mark Zuckerberg, says stuff about them on the 10th. You might want to just take this timeline and just track through these, because to me, I kept hearing it and I moved on to something else. And then I actually sat down and I made a list, sequential list of everything that was happening. And so this to me is actually kind of important. So I think we have to realize that when you look historically, there's something that happens in business when you get to the point when you are, established and you have the moat around you, and you have that product that is kind of bulletproof. And there are examples of this in history. The big three autos back in the 1960s, before the Japanese companies arrived, are a classic example. But you also have companies in there like, you know, BlackBerry, but also, Boeing. What was Boeing? It was like, oh, it was like the go-to gold standard. If you're some country like, I don't know, like, Indonesia, or not some huge country, or just if you're just some guy out there who needs to go and buy a bunch of airplanes, a bunch of jetliners, Boeing was your go-to name. And that brand, obviously it's had issues and stuff. And then what happens when you get to that spot, when you are the kind of go-to name, you get complacency. It often happens. And then you start getting into issues with lack of innovation, when people want to just kind of milk the cow and keep it going. And at a certain point in time, it tilts from kind of dominance to complacency. And then the problem is, very often when it starts to break down, then there's no culture of innovation to react to the crisis as it spreads. And it has the potential for the crisis to worsen before it gets better, or sometimes it never gets better. And I'm not trying to be that bearish on Apple. I'm just saying Apple's in a spot now where we have empirical evidence from like a lot of people, um, TF Securities, IDC, Counterpoint Research, and Canalys, all saying that Apple's losing market share. We have multiple people saying that they're losing market share to Chinese competitors. We have multiple people saying that they're not getting it done in the world of AI. Meanwhile, everyone else is focused on AI. So Apple here is in a spot where people might see, some risk to it. Now, the thing is, you get into that period of when you're General Motors or you're Boeing, when everyone says, oh, they're like this gold standard company and nothing can ever go wrong. But then what happens? The multiples get high. And then not only does the company get complacent, but investors get complacent and lots of money gets stuck in there. But then you get to this point when things start to kind of not do so well, and money starts to trickle out, and it can create significant risk. So I want to point out right now that when you look at what's happening in Apple right now, I mean, I mean, obviously it's had a decent sell-off and everything like that. So I mean, this is not anything with me talking about the actual chart opportunities here, but we could be in a spot here where the situation in Apple is actually a long-term problem, and it might not see it in the charts, but it taking a step back and actually looking at this and laying over a template, a narrative, or a sort of narrative that happens. We've seen this movie before. That is the kind of thing that maybe people are going to start to think about in a name like Apple. It has high multiples. It has evidence that it's kind of stalling. So I don't want to be overly negative, but I do want to lay this out there because I think it's actually something of a thing we want to kind of be aware of. So anyway, that was what I wanted to say about Apple. And, I said, is it the next Intel? Because Intel was a company that basically failed to achieve the nano chip, creation. They lost the edge to advanced micro devices. And now, we see what happened to Intel. Now, I'm not going to say necessarily something like that for Apple, but the key point is just that we are seeing evidence of that. And one of the things I've learned from investing, and especially from technical analysis, is that when you start to see patterns that you've seen before, even a stock, that nothing is always true. And when a stock has been good for a long time, in many ways, people can get complacent about it. So you have complacency in the boardroom, and then you have complacency in or I should say complacency in the organization. I'm not trying to criticize anyone, but an organization can get to a spot when you have a degree of complacency, lack of innovation, but then also investors can get complacent. But then when it starts to kind of go away, it can be something that lasts. So I want to just throw that idea out there. All right, those are the main things I had today. And someone just asked, you talk about Apple yet? Well, that was what I wanted to say. Now we get to, I just kind of break down here the key points of this breadth thrust right here. I actually show the other times when things kind of like this happened, and the sharp kind of increases. Um, I don't have the code I can share. If you actually code this yourself, you can use this code in easy language. When you're basically using the data, which is the data in question is this symbol, this $20 DMA, this thing. You take this and you put it in to a chart. And then what you do is, in this case, I had it in a chart as data two, because you can have multiple symbols in a chart, like right here. My main symbol in this chart is SPY, but this is data two. So if you actually click on this, you can see this is, wait a second. You can go to data, actually, edit symbol. You can see it's listed as data two, this one right here. So the thing is, you could just use this. You can take the breadth workspace that I gave you, MT breadth, this one right here, and you can basically, this one is also, I'm pretty sure this is data two, right? And you can basically work with it. See, it's data too. So I left that. That's the reason why I left it there, so you could do that. But the key thing is, if you use this in easy language, what you say is, now I did optimization to actually test this, and I found that 19 days instead of 21 days gives a clearer signal. And it was something like when it crosses over, in this case, when you see the surge of 280. So when it ranges by a difference of 280 over 19 days. That gives the clearest signal going back to like 2010. But it's just something I looked at. The important thing to realize, though, is that if you're in a bearish downtrend, then it's just the opposite. So it's just something that kind of shows that there's been a thrust of enthusiasm. And so that's how this thing works. But this is basically the easy language code. With this, the last thing I'll just say is, you're basically looking at the closing price, which is current price right now, divided by the lowest in a range. So the lowest is a function in easy language that will then look for the close of in this case, 19 candles. So we'll look at, what is the lowest close in the last 19 candles. So you're looking at the current today versus the lowest in that range, and that will give you the difference, and that's what shows us this spike. So that's how it works. Another time we'll get more into easy language. I just thought this was so interesting. I wanted to share it with you guys. So I hope everyone has a great day. Remember, we're going to do market trends on Monday. I hope to see you guys then. And hope everyone has a great day, and I'll see you Monday. Great weekend. Right, here's the link to that. Thanks, guys.